Hello and welcome. I'm Amrt and you're watching Law of the Land on Raj Sabha TV. Today we bring to you the Regional Rural Banks Amendment Bill 2014. The bill seeks to inject dynamism into the rural banks. To discuss the issue, I have with me Mr. Yogen Sharma, All India Joint Secretary, Regional Rural Bank Employees Association, and Mr. Ashwani Rana, Vice President, National Organization for Bank Workers. The government proposes to inject more financial flexibility and dynamism into the regional rural banks. The regional rural banks can now raise capital from any financial source. Government intends to amend the regional rural banks law to give greater freedom to regional banks in raising capital.
In order to drive growth in rural areas, the government plans to provide a better policy framework to make credit available in rural areas. Amendments to the regional rural banks law allow regional rural banks to generate capital from sources other than state, central governments and their sponsored banks. It also allows regional rural banks to receive financial assistance from sponsor banks beyond 5 years of functioning. These sponsor banks will now be empowered not only to subscribe to the share capital of rural banks, but also be responsible to train their personnel. Sponsored banks will also be mandated to provide managerial and financial assistance.
The regional rural banks, which have been passing through a very difficult patch, now the government realizes that they already have a big infrastructure. Now how to utilize this infrastructure by strengthening their capital and providing them more job opportunities, and then the sponsoring banks providing them the HR support through training, through expertise, through skill development. So on a large platform, it's a very, very progressive, very banking reform, and will bring these regional rural banks at par somewhere with the commercial banks.
The bill mandates rural banks to fix 50% shared capital to central government, 15% to the concerned state government and 35% to the sponsored bank. The central government is required to consult the concerned state government when reducing the limit of shareholding of the state government below 15%. The bill allows rural banks to raise authorized capital from 5 crore rupees to 2,000 crore rupees.
Based on for the shareholders, minority shareholders, they will have the authority to appoint their representative on the board, which will definitely increase the corporate governance in the RRBs also.
The Regional Rural Banks Amendment Bill 2014 was introduced by Finance Minister Arun Jaitley in Lok Sabha on December 18, 2014. The statement of object and reason states that the changes are being proposed in view of growing business of rural banks and the expansion of their business base in rural India. The bill amends the Regional Rural Banks Act of 1976 that provides for incorporation, regulation and winding up of regional rural banks. Proposed amendments to the regional rural banks will bring them at par with the commercial banks. Regional rural banks will now be able to lend money to those farmers and to those account holders in regional areas most effectively. With camera person Ashwani, Rajkamal Rao, Rajya Sabha TV.
In view of growing business of the regional rural banks and expansion of their role in extending banking services in rural areas, a need was felt to amend the Regional Rural Banks Act to strengthen their capital base and improve their overall capabilities. So straight away to you, sir, my question is, do you agree with this? The way the bill has come in, has been introduced, and the reason being given is it is to induce dynamism and more financial liberty.
No, it is not required. Whatever the government is given the reason, that is not sufficient. Since the inception of this rural bank 75, banks are doing their best. They are catering the services to the rural services. But what is the need today? Just to give, it is a way of privatization only. This money, banks are doing the service, giving the service to the...
How do you call it a privatization when the state government's stake is not allowed to go less than 51%?
They in the bill, they wanted to reduce their central government and sponsor bank stake will be reduced up to 51%. So from where?
Earlier, how much was it?
Earlier, 50% of a central government, 35% was sponsored bank, 15% of a state.
Okay, so
now it will be 51% of central and sponsored bank.
So it has gone down from 85%
yes,
to 51%.
They will reduce, yes, 50. And whatever investor will bring the money, they will have the influence in the bank. They will have their directors. And for rural service, for rural investment, it is not required such a big banks. Actually, our organization means in banking we need that a big regional rural bank is required. See, more than 20,000 branches of different rural banks is working, whereas 70,000 branches are of public sector banks, sponsored banks. So with this, we can arrange a big bank. We can create a big bank, National Rural Bank of India. So to that we can give some more.
I'll get you in, Mr. Sharma.
Right.
Mr. Sharma, about the main contradiction in the bill. See, they've come down from the earlier 85 to now 51%, which he terms as privatization or move towards privatization. But it can also be called as allowing more capital, allowing more stakeholders to come in. The conflict is where your sponsor bank is also allowed to do the same business that you are doing. And not only that, the private sector is also quickly moving into these areas. So now the regional rural banks will have competition not only from their private sector bankers, but also the public sector sponsors, the people who are also financing you.
Right.
How do you see this?
Sir, actually, if we really interested in analyzing the impact of these amendments, we have to go to the background why these RRBs were established. These were established in 1975 through an ordinance with a view to provide the banking facilities and particularly the financial rural credit delivery system. To strengthen the rural credit delivery system, these RRBs were established so that the last people sitting in the far-flung areas, in the backward areas,
Last man in the line.
last man in the line, he should get the benefit of the banking. He should get the credit. Earlier they were getting the credits from the non-institutional agencies,
yes.
like money lenders, like landlords, traders, at the very high rate. They were under the clutches of those people. These RRBs were established when the government saw at that time that even after nationalization of the banks, nothing perceptible improvement is noticed. That's why they constituted these RRBs. And if these amendments are allowed as proposed by the government, it will dilute the very purpose for which these RRBs were established.
Why do you say that? Because what the finance minister or this government really wants an RRB to do today is rise up to the occasion and compete with other two people, the private sector and the public sector, who will be competing with you shoulder to shoulder. Now, what is wrong with that competition?
There is nothing wrong with that competition. But what I feel that if we will reduce the government share in RRBs from 85% to 51%, and again the 15% share holding by the state governments will be reduced. So the total share, the bank which was earlier known as the total government bank, will no more remain a government bank. And the faith of the people in the rural area will be no more with the RRBs.
So, I've got you, Mr. Sharma. Any person who's a director of a rural bank is not eligible to be on the board of directors of another regional rural bank. The director will have a maximum tenure of 3 years with only one opportunity for reappointment. The bill also restricts the board of directors to only one bank to avoid complexities in board management.
The bill specifies the term of office of a director as 3 years and restricts the board of directors only to one RRB. The bill states that no director can hold office for a total period exceeding 6 years. The bill proposes to close the audit of accounts of regional rural banks on 31st March to bring them in uniformity with the financial year. Earlier it was 31st December.
There have been some amendment like one, member cannot be on the board of two banks.
Yes.
I suppose this is at par with the PSU banks. PSU banks also have the same provisions. Then the tenure of the board members have been increased from 2 years to 3 years. I suppose this is also a very good move.
The bill makes the provision for a director to be elected by the shareholders based on the total amount of equity share capital issued. Shareholders owing 10% or less are allowed to elect one director. Shareholders owing equity share capital between 10% to 25% can elect two, and those who own 25% or above can elect three. The bill allows central government to appoint an officer on 3-year tenure to the board to ensure effective functioning of the RRB. The composition of board of directors of the banks include a chairperson and a director to be appointed through the central government, NABARD, sponsor bank and Reserve Bank of India and other similar bodies.
This bill is passed, they will have access to the right type of skills from the sponsoring banks, where the already built up NPAs could be realized, and it will put a brake on the future NPAs, because due diligence and follow-up monitoring will be more stringent and will be more skill-based.
The government has introduced a bill in Lok Sabha in reference to Article 117 of the Constitution, so that the bill can be passed in Lok Sabha and does not need the approval of Rajya Sabha. The principal act was passed by both the houses. Majority of the regional rural banks in the country lack basic infrastructures. There are offices where at least 1 or 2 employees are functioning and performing the role of auditors and cashiers. With additional financial infusion and capital coming into regional rural banks, their infrastructure needs will be fulfilled. With camera person Ashwini, Rajkamal Rao, Rajya Sabha TV.
The Act specifies the term of office of a director, excluding the chairman, to be not more than 2 years. The bill raises this tenure to 3 years. The bill also states that no director can hold office for a total period exceeding 6 years. My question to you, Mr. Sharma, first of all, going back to where we had left, your original mandate, which you have just now pointed out, was to relieve the people trapped in debt in the rural areas.
Right.
Correct?
Correct.
Now, you are being asked to behave like a normal bank and not like a bank with a mission. Correct? Now, how do you see this changing if your identity as a government bank is taken away from you?
See, though we were working with a mission, yet we were working perfectly as a full-fledged bank, as an independent bank, as other banks are also functioning. So there will be no change. Rather, it will have an adverse impact. How it will have? Presently, we are having the directors from the central government, from the state government, from the sponsor bank, from RBI, and from NABARD. Means all directors from the government side. And all are interested to pursue the government policies, be it the finance to the agriculture sector, be it the finance to the small and artisans, be it to the finance to the small and marginal farmers, or whatever social cause you can see in that way. So, when the private players will infuse their capital, will contribute to the capital of the RRBs, they will have their own mission.
Which you apprehend is not going to be the original idea behind the RRB.
Right.
It is going to be pushed towards you behaving more like a rural bank and not a rural bank with a mission.
Right.
That's the change that will come.
Yeah.
And that will compromise, according to you, the reason behind formation of the RRBs.
Exactly.
Is that, I've got the point?
Exactly.
Coming to the NPA aspect, what is the level of non-performing assets in the regional rural banks?
Below 5%.
At the present, it is below 5%. But as a trade union, banks are not exposing all the NPAs. There is some NPAs which are not exposed, because if everything will be exposed, bank will be no more. People trust will gone. So they are managing.
Which every bank does. This is not only true for regional rural banks, but every other bank does the same.
It is banks, because small loans are there, so NPAs are less compared to the other commercial and sponsored public sector banks.
Okay. Now, also the point, what's wrong? I'll ask you the same question. What's wrong if your government identity is taken away from you and you are pushed to compete with other regional banks, other rural banks?
No, for competition there should be plain surface where private banks are coming to HDFC, ICI, new generation banks are going to the rural area. Sponsored bank, their own branches are opening in the... So what is the need? Then you cannot have a competition. Na?
And you anyway don't have the required infrastructure.
Infrastructure means we are very low cost. RRBs are functioning in a very remote area for which this public sector and new generation bank, it is not possible them to work in the remote areas. RRB's branches in a one-room branches, people are working with 1 or 2 staff. There is a staff shortage is there, facilities nahi hai. So many issues are there, so many HR issues are there. Their pension is not being given, their salary is not given, their allowance is not given. So they are deprived of, even though they are working for this as a mission.
On the NPA level, you said it was 5%. How is it different from other banks?
No, there is no much of difference. I mean, in other public sector banks also it is around 5%, and in RRB sector also it is around 4.56%, below 5%. Why it is so? Because our contact with the rural people is direct. Even after introduction of technology, because what we believe that technology can be the substitute of the brain, but it cannot be the substitute of the heart.
Correct.
We have heart-to-heart relations with our customers. So whenever the account is turning bad, we contact those people, we tell them the benefits of keeping their accounts regular, and in most of the cases we get the success also. That's why our NPAs are under the controllable limits.
On another point, coming to the issue of the board of directors, the way it has been fashioned, the way it has been designed, now the sponsor bank has been given a bigger space, a bigger role in the operational part of the regional rural banks, which means now they can induce training, finance, and also sit on the board and guide you how you have to conduct business, because they are from a bigger bank and they've been conducting business in a better way. How do you react?
Any greater role from the sponsor bank side is detrimental to the interest of the RRB. Why is it so? Because they are our competitors. They see us as more their competitors than the sporting agency for the RRBs.
Okay.
So it will prove detrimental to the bank's interest, RRB's interest. For that, what we proposed earlier also, that the RRBs should be amalgamated at the national level, and they should work under the single central agency like NABARD. Because now the NABARD has also given the functions of the retail banking. They have been allowed to go into the field of retail banking, and they are the experts also. They are doing it for the last so many years.
So it should be brought under the big umbrella of NABARD. But that has not been done.
Yeah.
Now you've been thrown out into the big wide ocean and have been asked to swim. Basically, that's what has happened. So the question that I want you to address is, now, what is the maximum? The proposed bill says that other sources can also be tapped for financial capital. How do you see this coming out? Is there a limit to it? And who are these people who will come under the word other sources?
Means from 85...
There's a government entity, there's a central government, there's a private state government and sponsor bank.
It will reduce from 100 to 50%. Means 49% will be diluted, will be given to the others. Others means open market. Anybody can take the share, na?
So is it pushing the RRBs towards...
it's a sort of privatization, not only.
No, I understand. Does it allow the rural banks to seek capital from the markets? Does it push them towards listing?
Yes, it will be from market.
And what will be the
only.
impact of that?
You see, RRBs are very small. 56 RRB entities are there. For small identity, who will go for investment? Earlier for public sector also, who is crying, the big banks are coming, we have go to merger. But which bank has come to India? Who will invest for this? Where so many government involvement is there. Nobody will come. If you want to really, it should be totally privatized. Na? You want to have your 51% holding also. You want to control and which private player will come? Because finally control will be by the central government, means 15%. वही बोलते they said कि our control will be there. We are the owner with 51%. So who will bring 49%?
And also, if an investor has a chance in the market to invest in a private bank or a public sector, established
they
public
will go
sector
for
bank,
in our bank.
they will
Na?
go for that and not for the regional rural bank.
They are timely, they are shifting, they are changing the agenda. Na? That is not good for this country.
So the big point here is that the banks will have to, the regional rural banks will have to give up their original mandate of serving a social cause. Moving on, my colleague Rajkamal Rao spoke to Mr. R.C. Khurana, former National Bank Group General Manager, Bank of India.
Upliftment of rural population, that has always been the motto and focus of the government, whichever government it may be, whether it is UP or ND or any other government, and that is in the right direction, inclusive growth. So that is the basic idea, and for that purpose penetration of banks is required in rural areas also. Because of cost factors in this thing, private sector banks and bigger public sector banks are also not able to penetrate that much as is the requirement. So that's why this model of regional rural banks was started, and they started penetrating into rural areas, in deep villages, even with villages population of less than 1,000 also, they have their presence there, because it was a low-cost model.
Every bank is established with a purpose. How do you see the purpose of regional rural banks changing with their capital rising? Do you think these banks will serve the purpose initially they meant to serve?
Secondly, reach of NBFCs, or for that matter now microfinance companies, so many are there. That's why now this new concept of payment banks, small banks, those things are also in that direction, so that dependence of this rural population on money lenders, that is reduced. That is the basic idea. Microfinance companies also, now there is talk of another institution, just like NABARD, so that they can provide refinance for this micro sector. So that is basically again on that basis only ki all these rural areas where so many micro companies are there, they can get advantage of these schemes of the government, and dependence on money lenders should be reduced.
Thank you, sir, for joining us on this discussion. It's time for us to end the show. You can email your suggestions and comments to law.rstv@gmail.com. You can also watch our shows on the RSTV page of YouTube. We'll be back with a new issue and a new episode. Keep watching Rajya Sabha TV.